Would you look at that? Nikola actually beat most analyst estimates when it released its Q2 earnings report on Thursday this week. This is a pretty big development, and in this video I want to give you guys the very good rundown of exactly some of the details that have been released about Nikola's upcoming catalysts for the rest of 2022 and an update on how Nikola's stock could actually perform into the rest of the year. I also have some important updates regarding other EV companies' earnings report, which could shed light on how Nikola can execute in the future, because obviously Nikola is now entering that extremely pivotal stage of realizing revenue and actually delivering real products. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit the subscribe button if you haven't already. So the first thing we want to address is how exactly has Nikola beat earnings estimates for the second quarter. Now, obviously, in terms of revenue, we came in around $18 million versus a consensus estimate of $16.46 million. Now, the funny thing is that this has actually been a trend for the past 2 years when it comes to Nikola. Although Nikola has not been reporting revenue, they have been reporting their EPS loss for each quarter. In each quarter, Nikola has actually beat the EPS loss that most analysts has expected. So what that shows us is Nikola has been overall executing at a higher level than most Wall Street expects it from. And that is a good thing if you're a shareholder in Nikola, because it means that right now, that growth and that well thought out execution might not be priced into the stock just yet. As you can see, the company delivered a total of 48 tray BEVs, which includes 4 mobile charging trailers, which is a pretty big deal because these MCTs are trading at like a 30 to 40% gross margin. Now, obviously, the tray BEVs don't trade at that because it's a very early stage production model, and there is no way that any company can get positive gross margin at the very beginning stages of production. So that's not a surprise. But the NCD sales are a pretty big surprise. And if you use this ratio of 48 to 4, then by that 400 and 500 delivery estimate for the rest of the year, you can understand how many MCTs Nikola might sell from a ratio perspective. And that is only going to add to the profitability of this company down the road as they sell more and more trucks. And regarding the truck deliveries themselves, as you can see, Nikola had guided for 50 to 60 deliveries and production units in the second quarter. And on paper, Nikola actually missed that estimate because they only delivered 48 and they only produced 50. Now, is that a big concern to me? Not at all, because there is very minimal leeway when it comes to the projections that such an early stage company can make. I mean, how do we really expect Nikola to project how many trucks they built when their factory just came online earlier this year and they only started ramping production in March? But regardless, this is still a pretty good beat, and as you can see, the stock is still going up, which shows us that most of Wall Street had not priced this in, and that people are noticing the progress that this company is making, which is obviously something I've been saying and hammering the table about for the past 1 year or so that I've been investing in this company. Unfortunately, the bear market fears and the Nasdaq collapsing 30% have played pretty big in the decline in Nikola shares. But overall, long term, there is a pretty attractive investment opportunity brewing in this company because obviously they're the number one first mover in the US, at least when it comes to electrified battery electric trucks. But obviously that's not all we saw from this earnings report. A big development was regarding some of the pilot tests Nikola has been doing. As you can see, Nikola has actually not released a number of pilot tests and not officially announced them, which should be new catalysts for the next few quarters. Right now, on average, they've released around a 94% uptime across all the 5 pilot tests that they're currently doing that are announced, and some of the unannounced pilot tests that are still ongoing. And as a matter of fact, in their latest presentation, Nikola gave us a great breakdown of the uptime, mileage, and demo days remaining for each one of these pilots. And the best part of this is that Nikola's Walmart partnership will be translating over to their battery electric platform. Now, the reason why this is a good thing is because obviously the battery electric truck is already in production. The fuel cell version is going to be in the second half of next year, which means that if Walmart wanted to order the trucks, the only trucks they can actually get on hand right now are the battery electrics. So although Walmart wants in the long term to work with the fuel cell version, it's great to see them also validate and test out the battery electric version, which could realize Nikola more revenue in the short term and obviously change the image this company has on Wall Street. And as for the fuel cell version, Walmart does expect to start their pilot this month itself on August 22nd. This will be a pretty big milestone. We should start seeing some footage of the truck rolling around near Walmart distribution centers. And obviously, we've already seen so much footage of the Nikola tray actually being delivered to dealer networks, which is where customers can actually go to check out the vehicles. And that's actually something I've seen a little bit of a concern for, is many people have been saying that these revenue numbers that Nikola has announced are not real revenue numbers because they're revenue that are being realized by them selling it to dealers. Well, that is precisely how this business works. Even in the car dealership business, the cars are sold from the manufacturer and the OEMs to the dealers, and then the dealer's job is to sell those cars and get their inventory out to the market. Now, obviously, the dealers use their own markup and they increase the actual price of the vehicle from the MSRP, but that's just how this business works. It's not like Tesla, where Tesla's cars are sold online. That's a different business model. This is a dealer business model, and nobody's going to go out, especially companies and fleets that have already used current ICE trucks. They're not going to go out of their way to go to Nikola.com and buy their trucks. Instead, they're going to want to work with their current dealers that are already in place. Dealers like Alta, Covenant, and all these other businesses that have such good supply chain and maintenance teams already in place. And so overall, that is a good thing for Nikola. It means that Nikola is not going to have to spend the extra money doing customer acquisition, which, as we know, is one of the biggest costs in the EV space and requires a lot of time for it to actually happen. As for the people that are saying Nikola's non-vertically integrated business model for not only building the trucks, but also selling the trucks is going to be a bad thing in the long term, I want you guys to hear Fisker CEO's recent comments in his earnings report, where he mentions exactly why the business of operating through a contract manufacturer for some of the key components within the vehicle is significantly more cost effective and better for first movers in the EV space than actually trying to design every single thing in-house. Now, obviously, Nikola recently acquired Romeo Power, so Nikola is actually gaining an advantage and an edge over some of its recent competitors by taking that acquisition at such a cheap price because of the distressed situation of Romeo Power. But overall, in the long term, with some of the other components, like let's say the e-axle or some of the suspension components that are sourced from external suppliers, Fisker CEO really does a good job of explaining exactly why companies take that approach. As you can see, when asked about production and manufacturing, Henrik Fisker mentions the fact that using contract manufacturers for some of the key components allows the company itself to focus on developing IP, developing the vehicles, designing the vehicles, and actually develop them much faster than some of the other companies. And that's one of the reasons why Nikola has been able to go to market so fast. Although Nikola has a lot of IP when it comes to the system integration, they leave a lot of the IP when it comes to, let's say, the battery cells or some of the more smaller components like the cooling systems in the vehicle or obviously the e-axles to other companies. They don't want to manufacture that in-house because although it's their design, it's very costly to have a manufacturing team and facility online. And obviously, there's other companies that do it much better than them. So it's significantly more cost effective to outsource this in the short term. But obviously, in the long term, if Nikola succeeds, then outsourcing can always be bought in-house. And that will also play in the hands of Nikola if they're able to succeed. As for their updates regarding the European joint venture, we did hear from Nikola about the fact that they're going to be building a 4x2 version of the BEV starting in the second half of 2023. You can see this right here. This thing has 2 axles instead of 3 axles. So this is going to require a little bit more R&D and optimization from Nikola engineers, which is why it fully makes sense for this truck to take a little bit more time than the Tre BEV in the US to launch to market. And then obviously we're going to have the fuel cell version, which is going to launch in the first half of 2024. This is actually pretty exciting because the Mercedes fuel cell truck is not expected to go into production in Europe by at least the second half of 2024. So if Nikola can stick on this timeline, then again, they're going to have a first mover advantage, not only in America, but also in Europe, which I'd argue is a bigger market for some of these electrified platforms and is likely going to adopt these electric trucks much quicker than in the US, although the total addressable market in the US is likely a little bit larger. Now, if we move on over to the cash burn situation and financials of Nikola, as you can see in the second quarter, they burned obviously more cash than they did in the first quarter. And the simple reason for that is because they're building trucks. And so their COGS, or their cost of goods sold, actually went up. But the really interesting thing to note here is that their R&D and selling, general, and administrative costs actually stayed relatively the same from the first quarter to the second quarter. Now, this is a good thing because this means that Nikola's cash burn on a basis point is not increasing that much. It's only the variable costs that are increasing, which is the cost of revenue, the inbound freight, and obviously some of the inventory write-downs they have to do because of the trucks that sit in their manufacturing facility until they get delivered to the dealers. And so overall, I'm pretty proud of the way that Nikola is heading and managing this situation. Now, over the long term, likely into 2023, this blue bar is going to go up because SG&A will increase as they sell and work with more customers. But that is a good thing because as long as R&D increases, the competitive advantage that Nikola is going to have is going to continue to go up. And as long as they patent every single system integration technique they develop, it's going to give them a big edge over some of the other ICE OEMs like Freightliner, Peterbilt, and Kensworth when developing the electric Class 8 semi-trucks. And you know what's really funny? The fact that Nikola's total liquidity from the second quarter actually made a big jump from the first quarter. As you can see, Nikola has around $841 million versus $793 million in the first quarter. Now, the reason why this is amazing is because obviously we have witnessed a massive crash in the NASDAQ throughout that time. So you would expect cash burn and the amount of liquidity available to go down. So if Nikola can do this during a bear market, then you know Nikola is going to have an easy time raising money when the market's in an uptrend, which we're starting to already see right now. And that's one of the big reasons why Nikola had to increase their authorized share count, because they need to be able to raise money when they have the opportunity. And so far, all this raise has been done through non-dilutive forms of equity raise, at least in the short term. It's Tune and Stone Capital and Antara Capital, which are institutional investors that have given money to Nikola because they think the stock can appreciate over the next 4 years by the time their debts and convertible notes mature in 2026. So overall, I'm pretty proud of where this earnings report has gone. As you can see, the outlook for the third quarter is around 70 to 80 trucks produced, with around 65 to 75 Tre BEVs that are delivered. And that should realize Nikola revenue of around $23 to $24 million. Now, this is pretty exciting because this means that on a trailing 12-month basis, Nikola's valuation is going to start making a lot more sense to Wall Street. And I will be releasing a video very soon within the next week that's going to explain exactly why I think Nikola's valuation right now is actually pretty cheap when compared to some of the competitors, even though Nikola is doing very minimal revenue in the short term. So make sure you guys have the notification bells on for that kind of video. But as usual, guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comments section below what you guys think of Nikola's earnings report. Overall, I think it was a great success, but obviously I'd love to hear your opinion. But as usual, guys, make sure to drop me a thumbs up, and I'll catch you guys in the next one. Take care.